The Kentucky Small Business Development Center is a statewide, nationally accredited program that provides no-cost, confidential business coaching and training services. Whether you're just getting started or are ready to expand, we have the tools, resources, and expertise to help you succeed. We're part of a national network, America's SBDC, with over 1,000 centers across the nation. To learn more about how the Kentucky SBDC can serve you, please visit KentuckySBDC.com or email us at info@KentuckySBDC.com. You can also reach us by calling 888-414-7232. Thank you for joining today's webinar. The chat feature is available for you to ask questions and interact with today's speaker. Please take a moment to introduce yourself and where you are watching from today.
Hey, welcome everybody. Welcome to another Wednesday webinar. I'm Dave Etkin. I'm the director of the Louisville Small Business Development Center here, part of the Kentucky Small Business Development Center Network. Glad you've taken a few minutes out of your busy day to join today. And as always, just to make sure that you can hear me and see me well, just look down at the bottom of your screen there, and just, if you don't see a toolbar, just hover over that with your cursor there, and that toolbar will pop up, and there you'll find the chat feature. And just go ahead and put your names, tell us your name and where in the universe you're joining us from. It's always interesting to see where everybody's from. So just go, if you wouldn't mind, just say hello and that you can hear me and see me. I'd appreciate that. And again, as we go through the presentation today, you can just kind of, if you have any questions or comments, put them in the chat. And we'll get right to that as well. Today we're going to do something a little bit different. Usually I have a guest with me today, to speak or present some information. But today I'm going to be the presenter, and I'm going to share some information on budgeting. And the reason for that is next week is actually October, which is the start of the fourth quarter of the year. And fourth quarter of the year is prime budgeting season. And so I thought it'd be interesting for me to take a little bit of time, connect with you guys and just talk a little bit about budgeting and why it's important, and share a little budgeting tool that I use a lot with the businesses that I've been involved with. And I've found it very helpful over the years, and hopefully you will too. And of course, as I told Ryan earlier, things will not go well for me. There we go. Come on now. Oh my God. All right. Okay, bear with me for a second. I apologize for that. Let's try this again. Oh, finally. There we go. I'm so sorry about that. So today we're going to talk about budgeting 101, building your good budget in 8 steps. And so again, I'm Dave Etkin. You guys see me every week. I'm the director here in the Louisville Center of the Kentucky Small Business Development Centers Network. I've got a lot of experience in launching, buying, and selling multiple businesses across different industries, some big, some small, some highly successful, some giant failures. I'm not afraid to admit that, but I'm always interested in helping other people navigate their business journey. I had a lot of people that helped me, and I feel like I really need to share what I've learned over the years from those people as well. So going forward, if you have any questions or you think I can help you in the future, as always, feel free to reach out. I'm always like to hear from anybody. So here's what we're going to talk about today. We're going to look about just, go through some financial information, figure out what talk about some different things you can do to make your financial information relevant to you. We're going to talk about what I call the bottom-up budgeting process. And this is a little bit different than what you would normally think if you did a personal budget or a normal budgeting for your business. And then we'll go through the 8 steps that you would use to build a budget, and then a couple tools that I like that you can download and use as well. So the question you'll always be asking, and I'm sure you will be asking as well, is why do you even need a budget? And actually, a budget is probably one of the most important tools in your tool belt. And without that budget, your business lacks direction. It's not so much that the information that you have, but it's more important that the process is done. That's where you really start to really understand how your business works, what you can do to change. It's the very basic first step to getting your business to grow and understanding what your business is capable of, and how to get to where you want to go. So, God. So just a quick question. So folks out there, do any of you guys, and put this in the chat, just say yes or no, do any of you prepare an annual budget for your business? So if you wouldn't mind just saying yes or no. Looked at the bottom there for the chat feature. Okay. Well, honestly, most people don't do budgeting, especially in smaller businesses. But regardless of the size of your business, a budget is key. So most people don't use a budget because they say, and I've said this myself before I understood the importance of a budget, but when you put a budget together, it's like difficult to, I used to think it's difficult to predict the future. But actually, that's the difference between large businesses, large publicly held businesses, let's say, and small businesses, that the larger businesses have the expertise and the resources and the information that they can use to almost predict the future. And that really drives things home, that you can predict the future. There's less uncertainty in your decisions because you have a good feeling for what's going to happen, and it's based on evidence, it's based on information. Many small businesses don't have good financial information, that they don't keep good books and records. And without those, it's hard to put a budget together when you don't understand what's actually going on. And just a little tip, a little side here, you've all heard that, from the SBA, that most businesses that fail in the beginning fail because they're undercapitalized. But the second most important predictor of business failure is having poor books and records. So it's not that that the business concept is wrong, or the business owner's a bad business owner, but those poor records make it hard to make good financial decisions in their business. Oftentimes people start doing a budget and then just get overwhelmed with the whirlwind of things going on day over day, day to day, and they just walk away from it. They don't look at it over time. But using a budget on a regular basis and making that budget comparison as part of your monthly financial reporting exercise is very important. Also, some small businesses or business owners just have a budget prepared by their bookkeeper or their CPA. So they weren't intimately involved in producing that budget. So it's just not something that they have personally invested in, so they don't really follow it. It's just another part of a book of papers that comes from the bookkeeping or the accounting department or their CPA. So it's not helpful. It doesn't, they don't use it, but still, the information is there. It's just since they weren't personally invested, nothing really happens. So let's go through our steps. So step one, get accurate financial data. And if your books and records, your accounting is kind of in disarray. I mean, fourth quarter is a great time to step back and get a hold of that stuff. Make it a priority. Set a fourth quarter goal to get all your financial data up to date and everything reconciled, and so it's ready for the 2023 going forward. So I know it's sometimes it's you look at your accounting mess is like standing at the bottom of a mountain looking at the top and just dreading the climb, but get it over with and get everything up to date. Another thing that's important is to make sure that your chart of accounts is set up correctly. This is a mistake I see a lot, that every transaction has its own line on the profit and loss. So the profit and loss statement might be 18 pages long. Not a good way to get information. So work with your CPA or your accounting professional to get a set of accounts, a chart of accounts that makes sense, that can be condensed or expanded as needed, and makes sense when you look at it. And I'll show you another format that's very helpful when you use the budgeting process that in just a second. If you have accounting software, make sure everything's entered correctly. You can reset all these things through that if you're using QuickBooks or something. And honestly, you need to own your financial information. You have to rely on others maybe, but you need to understand it and you need to dig into this stuff. And so I know it's hard, but don't avoid it. So step two, you have to review your historical information. So print out the reports. If you haven't done so lately, get your profit and loss in your balance sheet and go through each line and try to understand what's going on with those balances in each category. So if you're working in your accounting software, if you're working in QuickBooks, for example, I mean, you can hover right over the total balance on a line and see in great detail what's going on. So understand what's going on, and especially in the larger balances, try to figure out what's going on. Make sure those balances are correct, that you didn't miss anything, verify things, and then think about customizing these layouts and that would make it easier for you to understand what's going on and make decisions. So this is a layout that I like. And the good thing about QuickBooks is that you can have multiple report layouts. So you can have a traditional P&L that your CPA, your bookkeeper produces for you. That's typical, or you can also have one that's for you. I call this the business owner layout. And the difference here is that you want to recategorize your expenses. It doesn't change the amount of money you spent or the amount of money that came in, but it organizes it in a better way that you can make better decisions. And again, you can save this as a report in QuickBooks and then call it up, when you want to review it. Maybe you lay this side by side with your normal P&L layout. But this is a great way to understand deeply what's going on and make sense of it. So what happened here is that you would want to categorize things that it's in a meaningful detail. You don't want to have all those lines, and most P&Ls are just, it'll have expenses and there's a bunch of lines there of different expenses. You want to sort those expenses by bigger headings so that they make sense for you and you can understand what's going on. Also, cost of sales is important. You might want to recategorize some expenses out of the operating expenses up into cost of sales. So if you can really think about that, sometimes things make sense in a way up there, especially if they rise and fall with your sales, then it might be more important to move that up there. So I've seen where, for example, shipping and delivery might be under operating expenses, but it actually is a function of cost of goods sold, so that that might make more meaningful sense up that way. So again, we're not doing taxes here, but we're trying to get information that we can use, to make good business decisions. Another thing you might want to add to on this profit and loss is you can create a category for discretionary expenses. And this is especially helpful in the budgeting process because we may want to add items that we want to budget for, but we can pull away if we need to reduce our expenses. So there could be, repairs that we're thinking about making, or a new product line we want to bring on. So some of those expenses we can categorize in a different way that way. Also, we want to move some items into non-operating expenses. If it doesn't make sense in our new categories here in our operating expenses, in this little example, I have just pulled out a few. So I've categorized administration with some subcategories: marketing and advertising, human resources, and occupancy costs. So I can use those to get what the actual operating income of the business is, without being the expenses being minimized by other things like taxes and some other things. So work with your CPA, your accountant, to build this report in QuickBooks, so you can pull it up and use it for budgeting purposes. And I think it'll make a lot of sense for you if you do this. Go on. Here we go. So what we want to do in step 3, and our kind of the big picture of what we want to do next as part of our budgeting process, is we really, to make a good budget, one that will drive our business forward, we want to flip our P&L on its head. So normally the top line of any budget is the revenue line, and the bottom line is the net profit line. And what we want to do in our budgeting process is we don't want to start at the top line, the revenue. We want to start at the bottom line with net profit. So that's the first thing we're going to look at, is net profit for our budgeting exercise. So we'll do it exactly the opposite. We'll go, we'll work through net profit. We'll work on our operating expenses. We'll look at cost of goods sold, and then, only then, will we work on our revenue budget. So our first step is to think about how much net profit do we want to make? And the P&L equation is easy. It's cost of goods sold less the operating expenses, out of revenue. That's your profit. So what can we do to calculate a reasonable profit? What would be our target? And I put in here your salary. A lot of business owners, especially smaller businesses, work really hard, and every penny that they make in their business, they roll back into that business to buy more products and pay for more services, try to grow their business. And if there's a penny left over, then they'll try to pay their own expenses somehow. They are not really paying themselves much. So as part of this budgeting process and working towards a goal, we want to add in a salary, because if this is a real operating business, whether you as the owner did the work or not, someone has to do the work that you do. And so if you're not there, you're going to have to pay someone, to do that work. So what would be a reasonable salary for someone that does your type of work and does the tasks that you do in your business? And just put that in there. That's one way to think of it. Another way is to think of it is do a personal budget and figure out how much money I personally need to make to live the way I want to live, and plug that in. I mean, both ways are valid for budgeting. Again, budgeting is we're trying to project and figure out a way to get to where we want to be in the future. A third way to think about budgeting net profit is also return on investment. So we could do just a quick down and dirty return on investment. So when we opened our business, we spent $100,000 on furniture and computers and some machinery and things. And our net profit is $10,000. Well, that, if I divide our revenue by our net, our net profit, or investment by a net profit, that says I got a 10% return. Is that a good return on investment for, return on my investment? That's kind of a personal choice, but in a startup, it's fairly risky. You want to be paid for risk. I know VCs and angel investors, they won't touch anything less for 30-40% return on investment. So I would start with that, maybe, if you're going to use the return on investment method. But these are three great ways to figure out what that profit is. And that's where we start. We're going to start with our net profit of whatever this goal is, and that's our top line net profit. Next, we want to run through our operating expenses, and there's several ways to do this. We want to know what our normal costs in business, and that's when we pulled our past expenses, our past P&Ls. We want to look and see, maybe over the trends over the last 2 or 3 years, how fast are utilities increasing? Has insurance been going way up? Things like that. We also want to remove any outliers. So, for example, maybe in the previous year, you got into a legal lawsuit with somebody, and your expenses for attorneys was pretty high, but you settled that, so you don't expect that going in the future. So you would remove that from your historical data. You would, what they call, normalize that. Then just review all these expenses. Make sure you include your salary, and look at things with a critical eye. Are there things that you can do to reduce some of those expenses? So again, if the insurance is rising fairly quickly, maybe it's time to call some other companies to get some comparison quotes for that. You may want to just review your policy itself, your policy coverages. Make sure that there aren't ways to reduce that. You can work with your insurance agent on that. So sometimes you could raise your deductible, and that would reduce your monthly expense. Also, if you've made changes in your physical assets over the course of the year, you might want to tell your insurance agent about that. Maybe you sold some things, or you're not using them anymore. You don't need to insure a piece of equipment. Then that would also have an effect on what you pay for your insurance. I'll just be the first to admit, I've had one of my businesses. We sold 2 trucks, and I forgot to tell the insurance agent about that, so I paid the premium on these trucks that I didn't have for a bit, and so it can happen. And then, as you're looking at this, we talked a bit about the business owner financial statement, the business owner P&Ls just a second ago. So this is where you would look at some of these things and reclassify them. Maybe some of these expenses will give you a better clue as to what's going on in your business if they're moved up to cost of goods sold. Again, like sales commissions. Maybe if in this business, Dave's Decent Donuts, one of my funnier businesses, they're decent. They're not great, but that's Dave's Decent Donuts. But we do pay sales commissions on wholesale accounts, so that could be classified. Since that expense is only incurred at time of sale, so that would make more sense maybe if you moved up the cost of sales or cost of goods sold. Another good line item that could move up there would be merchant fees. So if you're using a lot of credit card for wholesale accounts or other sales, that moves up and down with sales. Maybe that makes more sense up in the cost of goods sold. But this is all at your discretion. Again, we're not doing taxes here, but we're trying to get good information. So again, work with your CPA or your accountant to put this together so this makes sense for you. So these are just, again, some typical expenses. I do want to say something about software subscriptions. This is something I see a lot of, where there's, every business has software subscriptions, and you seem to get more and more. just because it's a great way to run a business. So you have a QuickBooks subscription, you have a subscription to, MailChimp or, other things like that. I would work to, instead of listing them all out, individually, just lump them together under software or something like that, so that your P&L doesn't get clouded up. That's one thing that I tend to see quite a bit. And then we get to the cost of goods sold section of our P&L, and again, we do the same thing we did in our operating expense section. We want to understand the relationship of our cost of goods sold to revenue. These costs of goods sold, that number will increase as revenue increases. So we want to see if we can do some reductions there possibly, because the more we affect this cost of goods sold amount, that leaves more money for us to pay all these other expenses that we have to pay. So the higher the gross profit margin, the better off we are as a business. So are there reductions that we can do? Can we source materials and other things from a different supplier? Can we change things, the way we do things to increase efficiency maybe? Or also it's part of pricing. This is another structure that we do. Sometimes people will, again, we talked about some of the reclassifications that out of operating expenses, but sometimes you may want to split salary amounts into cost of goods sold and operating expense, split them out, because say if one person spends half their time in production, so they would be in there more if sales go up and less if not, and then the other time they do admin work or something. It would make more sense to do that. Again, just to understand the business model. We're not doing taxes here. We're just trying to get a good sense of the business and make good business decisions. And that brings us up to the last thing we talked about, is our revenue target. This is where we work to figure out what that top line is. What is the amount of revenue that we need to generate in the upcoming year to be able to do all the things that we wanted to do below, and all the things that we want to do that will give us our budgeted net profit and our budgeted personal salary, because we're a business owner, we should be paid well. And it's a simple addition. We know what our profit target is. We determined that. We work through our operating expenses, and then we add in our cost of goods sold, and that gives us our revenue target. So this is basically where we go. We know what we want to make. We estimated the operating expenses. We have to estimate the cost of goods sold, and that will determine what our revenue target is. So a great way to do that is a slick little budgeting tool that we use, just a quick break even. And these numbers don't match with what we were looking at, but you just calculate what we've done in our monthly costs on the right column, and our variable costs, which is more or less our cost of goods sold, gives us, a percentage of sales. And if we subtract in this example and the calculation, so to understand what our revenue target would be. So if our revenue is equal to 100% and we subtract out our variable costs, in this example, our variable costs are 63%. We subtract out that from 100%, and that means that 36.9% is our contribution margin. That's the amount of money that's left over for us to pay all our fixed costs, which are on the right. So if you think about this in terms of a dollar, that means for every dollar we sell, it costs us 63.1 cents to produce or sell that. We get to keep 36.9 cents, and that's what we use to pay everything else. And in this little spreadsheet, if you hit me up here at the end, I'll be happy to send it to you. It's a great tool. It just shows that our annual fixed costs are $150,000. We divide it by our contribution margin, which means our break even to hit what we budgeted with my personal salary, my targeted net profit is $406,000. I can divide that by 12 and give me a monthly number. 52 weeks, give me a weekly number. 360, and I get a daily number of what I would have to hit to hit my budget, $1,100 here. So that's a lot of information in about 2 seconds, but this is the easiest way to figure out what your target is. So what do we do next? We need to figure out what our revenue gap is based on where we want to go. So we just calculated our revenue target. If we subtract out our last year's revenue, that would equal our revenue gap. So we would look at that to see if it's realistic. And then as part of our growth strategy, our business plan for the upcoming year, we would look for strategies to close that gap. So for example, our revenue target for our donut shop is $550,000. Last year, we hit 411. That means our revenue gap is $139,000. So how are we going to hit that? What are those strategies are we going to use to drive sales up to get that $139,000 to get me the amount of money that I need for my profit target and the salary that I want? So what we did there was for a 12-month, 12-month budget. So now we need to, project it out, divide it by 12, and figure out, what's going to happen month to month. We need to review all these expenses monthly based on what we know. Take into account seasonality. All businesses don't do the same amount of revenue month after month after month for the most part. I guess there's a few that could, but some months are busier, some months are not. Lawn service is really busy in the summer, not so much in January. So take that into account. You can also add in additional planned expenses, and this goes back to when I was talking about the discretionary budget line item. So if you want to budget for adding machinery or vehicles or things of that nature, add that in there and then recalculate. And make sure you pay yourself. I keep saying that, but that's why we go into business. We don't go into business for any other reason other than to make money for ourselves. Well, I'll take that back. Some people would like to do other things like, do good in the world, and that's a valid point, but you have to live. And so make sure you pay yourself and make sure you put that in there. So when we were looking at the cost of goods sold, revenue costs more money. So when we look at the cost of goods sold, that relationship is key. And when we were drilling into that, we wanted to reduce our expenses within our cost of goods sold so that our margin goes up, and all our strategies need to push towards increasing the top line revenue, but doing it in a way that does not hurt our margin. Sales, again, sales cost money. The more that I sell, the more inventory and other things that I might have to buy, which can be a cash drain on my business. So that's, so the higher the margin, the better. If your margin is lower than you feel like it should be, or if you need some industry averages, what a profit margin or a cost of, gross profit margin should be in your industry, you can pull some data. If you Google that, you'll see some databases where you can pull some of that information. But if your profit margin is too low, this is how it will work. You can use this to inform your pricing strategy, so that maybe your prices are too low and you're leaving money on the table if you don't do the pricing increase. And then step 7, review staff resources. So we identified earlier that our gap was $139,000. So can our business comfortably grow that amount? Will we have to add more staff? Will we have to invest in new equipment? Will our employees be able to do it, but they have to work harder? Will I have to pay them more to keep them Can I add outside contractors to help? All these things are calculations that I would need to make as part of this budgeting process. And if you'll notice that it's each step when we add or come up with more information, we actually may have to go back through and rebudget, go through the budgeting process again, and enter this type of information to see how it pans out. And then lastly, once you do that, go through that several times, that's the time to finalize your budget, put it into action. And in QuickBooks, there is a budget function that you can use and enter that. So like when your profit and P&Ls are produced each year, it will compare your actual to budget and give you a variance calculation. That's very, very helpful. Review your budget on a monthly basis when you get your financial statements. And then if you get off track with your budget, step back and think about what happened, what you need to do to get back on track, and don't do it alone. I mean, if there's other people involved in your business, then have everybody involved. It should be a team exercise. The people on your leadership team need to understand what's going on. Be transparent. Oftentimes, the best ideas come from the people that are closest to the customer, and that's where you get a lot of budgeting ideas that can really get to your profit target as you want. Here's some cool tools, because a great way to start is, a great budget template. This is 3 or 4 great websites where you can download some free budgeting templates that are in Excel or Sheets. The Balance is a great website. They have a lot of good resources. A lot of it's geared towards personal finance, but the budgeting tool is pretty slick, and it'll work for your business too. Capterra has they're a great website that compares softwares, but they do have a lot of downloadable resources. They have a great budget template that I do like. Vertex 42 is an incredible website, an incredible resource. I mean, they have free Excel templates for almost anything you can imagine, and it's just a candy store of good financial stuff. And then our friends at Score, they have a great library of budgeting tools that you can download right off the website, and all this is free and well worth looking into. So later on this afternoon, we'll send you a recording of this and the slides as well, and we'll have these websites if you're busily trying to write this all down or taking screenshots or whatever. And that's about it, unless anybody has any questions. If you just hover over this QR code, if you'd like to speak to one of us here at the Small Business Development Center, you need some help or just want to chat about things. Sometimes it's just being a business owner is pretty lonely, and we can certainly commiserate with you. We also have access to a lot of resources that are all free. We don't charge anything for any time. Just hover over that QR code. You'll see our calendars, our coaches. You can actually schedule a Zoom call with one of us right there. You'll see our calendar and just put your name in. You don't have to talk to anybody. And we'll be there waiting for you on Zoom. If you'd like to reach out to me, hit me up at detkin@greaterlouisville.com. And if you want that break-even spreadsheet, shoot me a quick email and I'll send it to you. It's a great tool. I use it all the time. So let's do some questions. Let's see. Nope. You guys have been a quiet bunch today. So, but if you would look into the chat, Ryan's just posted our link for a survey. So if you wouldn't mind, give me some good reviews, because I need a little self-esteem feedback every now and then. And as always, we're here to help. Hope to see you next week. So with that, I'll say goodbye. So thanks everybody for joining me today on another Wednesday webinar, and hope to see you next week. So bye-bye.
Thank you for joining today's webinar. At the Kentucky SBDC, we know small businesses are the heart of our economy. That's why our goal is to help business owners start, grow, and succeed in Kentucky. Find out more about how our no-cost business coaching, training, and resources can help your business. Visit us at KentuckySBDC.com.